You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. And now, it's time for the show that breaks down the options market from unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the Option Block with your host, Mark Longo from the Options Insider Media Group, and co-hosts, Uncle Mike TOSAW from St. Charles Wealth Management, along with Mark the Greasy Meatball Sebastian and Andrew the Rock Lobster GIOVINAZZI from OptionPit.com. The Option Block is brought to you by TradeStation. TradeStation has been giving options traders an edge for over 20 years. Their suite of simple yet powerful analysis tools and lightning-fast order execution can be accessed as an app on your phone, web browser, or computer. Education is in TradeStation's DNA, offering help for traders of all levels. And now, TradeStation is commission-free for equities and options trades. For more information, visit tradestation.com/optionsinsider. And now, get ready to hit the Option Block.
All right, everybody. That music means it is Monday. It is noon Central, 1 p.m. Eastern. Do you know what your portfolio is up to? I guess we'll all find out together. Yep, it's time for the Option Block. My name is Mark Longo from theoptionsinsider.com, as well as, of course, from a little thing we like to call around these parts, the Options Insider Radio Network. Glad to see so many of you are utilizing our content in these turbulent times. There's a lot of madness out there, a lot of chaos, and certainly a lot of confusion out there in the markets. So glad we could help walk you guys off the ledge, provide a little information, a little sanity, a little education, some analysis, all sorts of good stuff. Remember, if you just subscribe to this show, make sure you upgrade to the full kit and caboodle, get the whole network wherever you get your finer podcast programs, including a growing number of you on the old tubes. If you like it on YouTube, we don't judge. Go for it. Enjoy. And make sure, keep those questions coming. You know you guys have a lot of them these days, so keep them coming. We do love to hear from you guys. And joining me on the program today, let's see. First off, out to the hinterlands of Chicago. We're going to do a double duty at hinterlands of Chicago today. First off, it's the Carmen Line / Option Pit World HQ. It also happens to be his basement. It's, of course, the Greasy Meatball, Mr. Mark Sebastian from OptionPit.com by way of Carmen Line Capital. Of course, I guess pretty much everyone's basement is their World HQ these days. Probably Goldman and everywhere else too. Mr. Meatball, welcome back to the program, sir.
To be fair, I'm technically in my spare bedroom on the second floor, not in my basement.
A raised basement, shall we say.
I do volatility views from the basement and Option Block from the second floor.
I got it. Now I understand. It's good to know the relative elevation of the programs. That's useful. I like that. That's good information, sir. So there you go, listeners. No longer coming to you from a Costco near you where he's spilling the beans upon himself. No, now he's coming to you from various levels of elevation from throughout the week. Let's find out what elevation he's in. Maybe he's under the ground, which we'll find out. Of course, we're talking about Uncle Mike TOSAW from St. Charles Wealth Management. Uncle Mike, welcome back to the program. What is your relative level of elevation today, sir?
I am actually below ground, broadcasting from my kids' Lego playroom here. So I'm surrounded by the Legos. So if I'm as I have been over the course of the past few weeks, but if I'm slow to answer a question, I'm probably building some type of Star Wars Lego figure.
Well, who can really fault you when you're surrounded with such sweet, sweet Legos? maybe in the process of building a Lego too myself over here over the course of this extended quarantine. Mine more fall into the Masters of the Universe exclusive collectors realm, but that's a conversation for another day. 5 packs, thousands of pieces, crazy madness. But let's keep on rolling instead into the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the Trading Block.
All right, everybody, let's get into it. As fun as Legos are, there's a lot of fun and madness and chaos to be had out there in the broad markets today. Come into today's show, we're seeing a lot more chaos on the screen. Of course, last week was a week of joy, optimism, the week ending on an up note. Pretty much people really diving into these hopes of a potential treatment coming out of Gilead out there. And now maybe over the weekend, saner, cooler, calmer heads, more cynical heads prevailing. Gilead getting downgraded by BMO. And of course, the big story out here today is just Crude. It's just WTF is pretty much the best way to describe what the heck is going on out there in Crude. Before I even get to that, let me set the stage for you. I'm getting so into Crude, I'm getting ahead of myself here. Of course, the S&P off about 0.75% right now. The Dow off a little north of 1%, about 1.2% or so. And the NASDAQ a little bit south of unched, about not even 0.1%. So, again, weird trifurcated market we have ourselves in. Gold up slightly, and Crude, like we mentioned, just getting the crap beat out of it. Again, if you're looking at your Crude charts, listeners, you're seeing weird stuff. You're seeing like WTI at like, $5 and stuff. And just take a breath, calm down, and then realize what the hell is going on out there. Because these are crazy times. And we're seeing a crazy time where WTI, which is, of course, the U.S. kind of benchmark for Crude. You have Brent internationally, but WTI is what most of the U.S. participants focus on. It's our West Texas intermediate. If you like WTI talk, of course, TWIFO is the show for you. Talked a lot of it last week, including the skew. And the skew is not buying any upside, and now I guess we could see a why out there. Because we're seeing WTI. They came for it hard today, listeners. It was off nearly 45% at one point, hitting the 10 handle. Again, this is the front month, which is the May contract, which is going out pretty much in less than 24 hours. Hit a 10 handle out here. This actually threatened to break into the 9 handle at one point out there. Coming at showtime, it was at 10:42. Just to give you some frame of reference for what's going on out there with the futures. I mean, we always talk VIX futures, and people are used to backwardation a lot now, with the front month being extremely bid over the rest of the months. It's exactly the polar opposite right now in WTI. The May contract, you can't give it away. Folks are clamoring to get out. They're dumping it wholesale because they don't want to get stuck having to store Crude or pay all those, because you can't. There's no storage. The prices of storing it right now has just jumped astronomically. So we have, I think, what you can call super contango, aggressive contango. We saw effectively the May contract come into showtime was over 12 handles below the June contract. Just one contract later, 1 month, you're talking over 12 handles. It was about $10.50 for the May contract and $22.86 for the June contract. Let's let that sink in for a little bit. You go all the way out to July. Crazy Town, July, all that way out, and it's about $28 so just $10.50 versus $28 2 months out. Just the degree of that contango is insane. Of course, products like USO are getting hit, but the USO has a rebalancing doing so. I'm out to check on the dates on that, but I think they're mostly into the June future, I would think, at this point. I don't think they wait till the very last minute to rebalance. If they do, that's yet another issue with USO, which we can discuss out here. But we're hitting pretty much 34-year lows at this point out here in WTI, listeners, which is just, we haven't seen levels like this since 1986, to put it in some perspective. So this is just insanity on just about every level. Everyone's wondering, saying, well, will this continue into the next month, or is this a very short-term storage, physical delivery type blip? We're also seeing the government talking about trying to perhaps gobble up more of that if they can to try to support some of these levels here. In addition, we're talking about other things hitting the market today. There's issues with this small business relief package. They're trying to add more to it, of course, but a lot of it was already gobbled up by large chain restaurants and companies that things don't really qualify as small businesses in my book. So that's been an issue. A lot of the actual small businesses haven't been able to qualify for these loans because large companies beat them to the punch. And of course, the issues with the tariffs and everything else going on out there. We saw VIX coming into showtime. Was at about a 40 handle. Let's see how we're looking right now. Yeah, still about a 40 handle, a little bit north of that. That puts it down about 2 handles from where it was last show. Our old friend, the VVIX, a.k.a. the VIX, the volatility of VIX, I should say, up. It's about 125, down about 8 handles. So we're getting back into those normally elevated levels, I could say. So we're not threatening 180 anymore, but we're still extremely elevated. 125 is very elevated. VXX to about 40 and a quarter, down about 3/4 of a point. And since we're talking crude, let's talk OIV, which is, of course, the VIX of WTI. We don't really talk about it much. Talk about it on TWIFO a bit. But that one, as you might imagine, things are moving out there. 162 right now. That's up 40 points just today. Again, that front contract is on fire right now to the downside, so that's causing a lot of that OIV levels. But OIV, if you're interested in crude and you're not watching OIV, it's one you definitely should have on your radar. It's a great benchmark for just what the hell's going on out there. If you want to go deeper, of course, listen to our TWIFO show. But OIV, a great place to begin your analysis. Uncle Mike, I know you like to play in energy, usually around XLE. So maybe we'll start in your neck of the woods. What do you make of this crude Armageddon going on out there? And what else is lighting up your tape, sir?
Well, I mean, I'm personally of the school of thought in regard to the crude Armageddon that this is kind of a blip on the radar, so to speak. Now, how long the blip goes, maybe it becomes a blup. I don't know, but I just have a hard time believing that we're going to maintain the crude oil prices from 1986 for an extended period of time. So I'm of the school of thought that thinks this is kind of a blip on the radar, and that if you are looking to profit in some way, shape, or form with crude oil, then it's not necessarily a bad thing to do. I mean, reality of it is that at the beginning of 2016, we weren't quite at these levels, but I'm just looking at one of my charts here. We were in the mid-20s back in February of 2016. So we have seen these levels in somewhat recent history. So I don't know if this would necessarily, you could even argue that this might be a long-term double bottom. With crude. I don't know. I'm not a crude trader, nor do I pretend to be. But it's just definitely something to look at. The interesting thing that I am seeing out of this, though, is through this, XLE, as you had mentioned just a moment ago, that's only down roughly 1.5% on the day. And so I think what that shows is that it's one of two things. Either since a lot of these companies also drill for natural gas, maybe natural gas is going through the roof. Oh wait, no, it's not. So it's not that. But I think that the market is viewing this in crude as kind of just a blip on the radar, so to speak. So I think that's where we are with it. Or maybe I think that, I think it's just a blip on the radar for what we're seeing.
Now, since you mentioned, before you keep going, you mentioned XLE. I used to always joke that the XLE, the 30 put was your level, right? That was you were blasting away at the 30 puts when we were far higher in XLE. As it so happens, we are threatening that 30 handle right now. Uncle Mike, is that looking very attractive to you?
I'd be lying if I said I didn't buy more of it at the 30 level. I'll leave it at
See, how do I know? How do I know this after doing the show with you for so many years? Do I just know your levels innately now or what?
Well, you listen, and then I guess I actually forgot that I had mentioned that, but I guess it shows I'm a disciplined trader without even trying to be.
There you go. See, and it shows I pay attention to your madness. Aside from XLE and blasting away at the 30 strike on those juicy puts, or what else is lighting up your tape?
Okay, full disclosure, I did not sell the 30 puts, but I have increased some overall positioning in XLE just by simply buying it with this. But anyway, the other thing that I think it's a big story right now is the Paycheck Protection Loan, the PPP. And so I had a long conversation with as St. Charles Wealth Management. I'm actually a subchapter S corporation, so I had a long conversation with my accountant on it. And it doesn't work for me. I don't qualify. I mean, my accountant said I could qualify for it, but I'd basically have to make this crazy case, just saying that I'm in financial turmoil. And so, I said to him, I'm like, well, I get paid quarterly from when client fees get deducted from their accounts, and so. With that, my pay actually went up a very slight amount from Q1 to Q2. Now, my AUM did go down slightly, but I got a couple new clients. So just the joy of put options, I guess, so to speak, and hedging and that type of thing. But with it, I don't qualify for it. And what's tough is that there's a lot of small businesses out there that are not that could qualify for it. and they're not going to get it because the money's run out. Now, whether there'll be more money, less money, who knows? That's not for me to speculate. But one thing that the reason that I really didn't want to pursue it is that my accountant just finally even told me, he's like, look, if you pursue this and you get this, even if you have the most great argument for how the markets are uncertain and they still approve you anyway or whatever, then you're taking that money from someone else who is struggling to put food on his table this month. And so I'm like, okay, well, that settles it. I'm not going to pursue it. But what is sad is that a lot of people rushed for the great 2020 government candy grab, and I'm not sure everyone that got it really needed it. I don't know. I guess we won't know that on this side of eternity. But I think that what's going to be hard for our economy in the small business sector is for the people that tried to get it, that maybe worked for it and did the right things, filled out the right paperwork early on, and were early on it, but because the bank didn't do the right things or they just didn't get to it, or it's because there's just so darn many of them that people are going to continue to struggle because of that. And where I'm going with this is that on the big business side of it, that's not going to be that much of a problem. McDonald's is still going to be in business tomorrow. I'll even give you a 51% guarantee on that one. Normally I don't go so bold, but I'll even give you a 51% that McDonald's will be in business tomorrow. But just the Joe's Hamburgers, companies like that are going to struggle. And so the ultimate disconnect with small business and the market in general is going to be the S&P 500 is ultimately going to recover much, 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 much faster than the economy as a whole. And the reason is that the S&P 500 makes up 80% of all U.S. business and commerce. And as it does that, McDonald's, they have a bad quarter, they can survive. They can have many, many, many bad quarters and they can still survive. Joe's Hamburgers, who's competing with McDonald's, is dead after one bad quarter. And McDonald's then, the fact that Joe's Hamburgers isn't there anymore, McDonald's is more than happy to take the business from Joe's Hamburgers. So I'm not trying to be ideological or anything along those lines, but what I am trying to say is what's really lighting up my tape is the fact that big businesses are going to continue to grow and get bigger through all this. Final thing I'd like to say or mention is that this was very much a market last night that was not looking good if you were looking at the futures, in that a lot of people did not want to come to the cash markets long this morning. S&P was down roughly 55 points at one point last night, but markets did recover quite a bit, and they're not fully recovered by any means, as we're still negative on the day. But just another thing to mention on here, we talked about, I think even this last Thursday, in terms of cleaning up your risk going into the weekends. When we're in higher volatility markets as such, going overnight and going into the weekend, sometimes it's okay if you're not levered or you're fine holding the position and you're okay with it. But if a gap hurts you, you need to be much more cognizant of gap risk, weekend risk, overnight risk, whatever you want to call it, in markets like this than you would be under more lower volatility in a more lower volatility environment. So that is what is lighting up my tape today.
Yeah, we have quite literal weekend risk out there these days. We've been saying it for a while here on the show. If you're blasting away at premium, like a lot of you are, you probably want to close that out going into the weekends, a lot of gaps. And if you're just long a bunch of stuff going into the weekend as well, maybe consider taking some of that out. This weekend, a great example. Look, going into the weekend, everyone was joyous, excited. The news, potential treatment, the markets were looking good. And of course, as always, typically happens over the weekend, bad news prevails. And we see some aggressive downturns as a result. So these are turbulent times to be holding a lot of size positions out there, listeners. So if you're not comfortable, certainly. If you're comfortable, then okay. But if you're not comfortable, you can have sleepless nights over the weekends, then, keep your trade short term. We said it before many times. Keep them small, keep them nimble, keep them safe. And you could weather these storms and probably look all right at the end of it out there. Good. I'm glad you didn't hear Uncle Mike, by the way. He didn't take that loan because, Skippy's needs the money out there. You got to keep the gyros and the lemonade flowing. If I was in St. Charles, I'd be ordering them every day just to keep them afloat because they're delicious. So give the money, save Skippy's out there. But let's head on out. I don't know where the meatball is getting his food from these days. Maybe he's making delicious greasy meatball. Mr. Greasy Meatball, first off, where are you getting your fine, delicious food in these quarantine times? And then B, what do you make of these crazy markets we're in yet again, sir?
Yeah, well, we like to go local. We go to the Choo Choo, who maybe has the Choo Choo in beautiful downtown Riverside. Not only is it one of the 10 towns that changed America, it also happens to have a restaurant that maybe makes the best burger in the city. That double cheeseburger they have at the Choo Choo is pretty darn good. I would venture to say I think it's better than even any burger they have at Au Cheval. It's that good. And having eaten at Au Cheval several times. And but I got to say, quite the turnaround. You would have thought the price action in oil would have driven us substantially lower, and has thus far not. And that kind of surprises me. There is, oil, could it get any worse? I'm not so sure it could. And, that is pretty darn amazing in terms of how oil has behaved. I'm just utterly flabbergasted by the price action. And just goes to show you that the way the world economy has collapsed, and you merge in the price war. But think about this. I saw a tweet today from Stephanie Link. The entire oil sector is now worth less than half of Microsoft.
Jeez.
In terms of the S&P.
By the basket.
It is unbelievable. I've never seen anything like that. Pretty darn impressive.
That's a terrifying stat out there
right
now.
It tells you what you really need to know about what's happening, right?
Yeah, we had a listener ask not too long, I think it might have been VolViews, if there was, or maybe Options Bootcamp last year, I forgot, if there was a service where you could buy a basket for all of earnings strategy. Maybe someone needs to put together that entire industry basket, or you can just go for a surrogate, a thing like XLE. Sounds like Uncle Mike liking it. Blasting away at those 30 puts. I'm just kidding. That's just the level I know he likes out there. Let's see what the market likes out here in terms of volume. What's lighting it up out here today, listeners? And outside of what's going on in crude land, not a heck of a lot. In fact, maybe we'll pull up some of those and add those to the mix as well. See what's lighting it up out there. But our old friends, VIX, at about 105,000 contracts as of a few minutes ago. So not exactly boom times. Also, the ADV reflecting not exactly boom times out there. It's back under 500K, back under 500,000. It was pretty much 3x that a few weeks ago. So things have quieted down from a volume perspective out there in VIX land. SPY, similar deal. SPY at about 2.4 million. Right now, the ADV just a tick shy of 6 million out there, so about 5.95 million. The S volume has come off quite a bit. The S is at 630,000 as of a few minutes ago. The ADV less than 1.5 million now. So maybe the S and VIX, of course, VIX pick traded as well. Maybe feeling some of that lack of the floor presence out there as a result. The Qs, about 270,000 contracts as of a little bit ago. The ADV, 744,000, so shy of 750,000 out there. And the small caps, which have been leading the dance to the upside and to the downside of late, feeling their volatile oats out there at 302,000 contracts. The ADV, 657,000. I said let's mix it up a little bit out here as well. Let's talk about some of our other friends out. Let's look at USO, our predictably crappy. And remember, these are crazy times out here, so... the USO suffers from contango, and there's a lot of contango out there right now. So if you're going to play out there, and I can see all these levels that can be attractive to you, make sure you keep them small, keep it safe, stay nimble. Don't just buy and hold USO and put it in your IRA for a rainy day, because it's going to underperform until this contango really, even though the price level is cheap, I get it. But until this contango sorts itself out. And we'll know by tomorrow, because that contract's going away, whether they hammer the next month contract or not. But there's enough stuff to do out there that if you did put on some levels here, you could do stuff, as the Rock Lobster would like to say. USO at about 1.33 million. The ADV, 708,000. So pretty much 2x the ADV out there. Let's see if XLE is a similar story out there right now. XLE has about 106,000 contracts on the tape right now. The ADV is 87,000. So well north of that as well. And let's see. Yeah, it's pretty much even puts to calls in XLE, which is kind of interesting. About 51,000 to 55,000. Let's see what the tail of the tape is out here in USO. USO is interesting. It's predominantly calls. 940,000 on the call side. 388,000 on the put side. So puts or should say calls dramatically outnumbering puts out there. Maybe that's some overriding. Maybe it's folks saying this is crazy overdone. We're going to spring back the second this near-term contango, second that May contract goes off the board. Either way, there's tons of call positioning out there right now in USO, which is certainly quite interesting. Let's see out here. Now, of course, interestingly enough, I'm saying here we're looking at volume of 1.33 million in USO. So obviously our most active equity options, that's going to dwarf anything out here because these are individual equities. These don't include the ETFs out there, which are a different beast entirely. Maybe we should start roping them in as well. But then this rundown segment would be another 20 minutes. So let's see the top 10 out here in equity options right now. It cost you $124,000 to break into the top 10 today. That's a decent amount, not huge, not little, kind of right in the middle there. $124,000. They get you to Roku, number 9, the name everyone's talking about. At least they were on Friday. This is Gilead, number 9 here, $131,000. Tied with number 8 with Netflix there as well, also at $131,000. So 8 and 9 kind of combo there. Number 7, good old Baba, back in the top 10 with $155,000 at number 7. Number 6, Microsoft, which is apparently dwarfs the entire energy sector now out there. $171,000. Number 5. Once again, these two always in the top 10 right next to each other. It's very strange. Number 5, Boeing, our friends across the street there, $172,000. Number 4, Bank of America, right next to it, $189,000. They move in lock. I think people have ticker confusion between those two. What else could explain the fact that they're always in the top 10 right next to each other, never by themselves? Number 3, Tesla, $210,000. Number 2, Apple, $261. It means we're repeating what we saw last week as well, where AMD kind of taking the top spot yet again, this time with 286,000 contracts on the tape. Before we move off, it is earnings season. It's popping off yet again, listeners. We're back in it fast and furious today. After the bell, well, before the bell, we had Halliburton, which is kind of interesting. And then after the bell, we have Ally, our friends over there at Ally, as well as IBM and Equifax Tuesday. We have the most Buffett of companies besides Berkshire. This is Coke. We have Netflix. We have Snap and Chipotle on Tuesday as well. Oh, Interactive Brokers as well. And Wednesday, there's Delta. There's Kimberly-Clark, NASDAQ. We've got TD Ameritrade, so maybe we'll get some more insight on what's going on with the whole Chuck Schwab deal. Thursday, Domino's. Probably a lot of you sending out for pizza right now. Southwest Airlines, E-Trade. We'll see what's going on with their deal, as well as Intel and WWE. A lot of headlines going on out there. They're having massive layoffs last week. So all kinds of craziness going on in WWE land. Friday, Verizon and American Express. Of course, if you want all those reports, you know where to go. TheOptionsInsider.com. Let's just see if we can pick some fun ones. Really, here we go. WWE. Got the report here for you. They're popping off on the 23rd. They were coming into the show time. They were the report time. They were at 40.5. That's well north. They were threatening the 30 handle to the downside not too long ago. So they're about 10 handles north of where they were a few weeks ago. Let's see, 40.5 bucks or so. They were pricing in 222. That's actually a little bit lighter than their past earnings moves of 271. So a little bit of light vol out there in the WWE land. You think if anything would be volatile, it would be wrestling. But apparently not. Ameritrade, same deal, 37.32. They were pricing in 77 cents. That's kind of in line with what they had with 79 cents, which, again, they're expected to be in the giant corporate action. So that's not exactly surprising out here. Let's see if we can find a couple more. IBM, the old Beamer, was the marquee pit in the SIBO back when I first started down there. Marquee equity option was kind of one of the only ones until all the madness happened. Then all of a sudden we were trading everything. Well, that's a story for another day. There's some stories we could tell you about that, listeners. April 20th is that's today, of course, for IBM. They were at 120.12. Coming into this report, they were pricing in 575. Kind of a little bit of flipping of the script here. They've actually in the past delivered 666. So pretty much the same, actually, is what we've seen for all the other names. A little bit light vol, which is, again, I think, given what a lot of you have written in and our own analysis, a little surprising. People would be expecting, there is so much uncertainty right now around what the outlook is for all these names. You'd think to be a little bit more vol, not a little bit less. That's pretty much what we're seeing. Looks like Netflix is delivering that. Netflix was at about 423 coming into this report. They're pricing in 25.16. In the past, they've delivered 24.35. So they're pricing in a little bit more. Then again, lots happening in Netflix out there right now. So interesting stuff. There's a ton of names out here. I could spend the whole show just going through these. Intel's in here, a bunch of other ones. Xilinx. Check them out for yourselves. TheOptionsInsider.com. We have to get rolling. We have to unleash the eye of Sauron. Yes, it is time for the Odd Block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, everybody, welcome to the Odd Block. Let's get weird. Let's get wild. Let's unleash the Eye of Sauron, see what it finds for us today. Remember, we're watching. Always watching. And we'll kick it off when you're thinking of all the craziness that's going on out there, crude, all the madness, pandemics. Of course, your first stop when you wake up in the morning and check your stocks, it's going to be Ruth's Hospitality Group. Yep, we know what you're after. Of course, this is the parent company of the Ruth's Chris Steakhouse chain. Interesting stuff. If you've been listening to Twifo, you know that whole cattle and beef market has been just completely in turmoil ever since this pandemic madness first hit. Now we got some numbers come out of Ruth's Chris restaurants. Demand is pretty much falling off a cliff. I'm not sure if there's a lot of takeout going in from higher-end steakhouse chains, but I suppose we'll find out. Ruth's Chris not feeling the love of late at $8.09 right now. Ticker symbol Ruth. By the way, in case you're wondering, a year ago, by the way of comparison, they were trading $25.44, so a little more than 3x where they are right now. In fact, coming into all this, they were trading about almost $24, and then mid-February hit, and pretty much the entire bloom fell off the rose. They hit a low of $4, listeners, $4.16. So I guess if you want to look at a glass half full, they're up 50% from that nadir back in mid-March. But again, we don't know how this economy is going to reopen, how it's going to do, and if so, what's going to happen to restaurants. Are people going to feel like going back and flocking out and gathering in restaurants again in large numbers? Who knows? Let alone are they going to have the capital for more expensive things than McDonald's? There's a lot of questions out there. And it seems like Ruth's Chris is weathering those right now because it's off 41 cents or about 5% today. Let's see what our Eye of Sauron found out here today. Now, that 5 handle, speaking of 5%, that 5 level is about where our action is today. Looks like someone coming in and deciding, you know what? This sell-off in Ruth's Chris, if it gets dramatically worse, back to where it was, close to where it was, I should say, that mid-March level, I'm going to pick some up because someone coming in and blasting away, drawing that old Rock Lobster-esque line in the sand at the 5 level. It was the May 5 puts going up 12,827 times for 20 cents. So again, about almost 13,000 going up, hitting the bid. The bid was, they were 20 at 30. This guy said, I will take all that you got out at 20 cents. Going up on the Gemini. Again, these are quite a bit out of the money. The earnings are on May 1st. So there are going to be some earnings baked in to this level as well, which is probably how he was able to get 20 cents for these puts out here. Someone drawn a pretty sizable line in the sand. Mr. Rock Lobster, I know you like to watch a lot of the restaurant. I know your biggest favorite is Darden restaurants. Unfortunately, they're not on the Eye of Sauron today. But we got Ruth's Chris for you out here. What do you think about someone coming out and drawing a pretty decent, pretty sizable line in the sand here in Ruth's Chris?
Ruth's Chris has some really negative news. What they were one of the PPP loan people that came out there, where there was a ton of vitriol about them getting a PPP loan. I don't know if this has anything to do with that, but it totally could. Negative headlines. I mean, that's what you don't need if you're a struggling restaurant, is to also then have a bunch of negative headlines about going after a PPP loan when it maybe isn't appropriate for the size of your corporation.
Yeah, we saw Steak Shack, I think it was, giving it back. They got caught with their hand in the cookie jar as well, I think to the tune of $10 million. Ruth's Chris, they got $20 million in a taxpayer small business bailout loan, effectively. They had $42.2 million in profits last year. They spent $5 million of that buying back their own stock, which drives so many people crazy. They spend all their money on their stock, and then go figure, their stock's a lot lower. Where'd all that money go? The CEO, by the way, gets $6.1 million. And they took $20 million in money for small businesses to stay afloat. So, yeah, certainly not good headlines out there. But from an options perspective, we'll keep the politics and the headlines aside of it. This is someone looking like he's willing to pick up quite a bit down at the 5 handle. So, you know what? We're going to keep an eye on this. What do you guys think, listeners? Do you think you'd pick up some Roots Chris, or I should say really Roots Hospitality Group at the 5 handle, or effectively 480 for our friend here? Because our friend is. Are you going to join them, or you think this thing is got a lot more downside to go before perhaps to see? Maybe no more. Maybe they're going to go out after this. What are your thoughts here? Meanwhile, it's another name that is just loaded with political controversy. Of course, we're talking about Halliburton. They had earnings before the bell today. Trading right now, ticker symbol HAL, by the way, H-A-L. Trading right now, $7.78, up 20 cents. This name a year ago was trading 31. Of course, they're huge in the energy space out there, as well as a number of other endeavors out there. The latter portion getting some of their political heat for them over the past decade or so. They bottomed out, looks like around 4.25, actually, back in the dark days of mid-March. Now at 7.75, so they're not quite up 50%, but they've had a decent retracement out there. Let's see what our Eye of Sauron has found out here. It looks like someone, after today's numbers, is deciding to take what juice they could get and to fade this rally pretty hard to the upside, because they were crushing the May 8 halves to the tune of 54.1 cents. This is actually through the bid. They went up 12,680 times. The bid was actually 55 cents. This guy had to go through it to get nearly 13,000 done. This went up over there on the MyAx again. So this is someone, they heard the number, probably decided, you know what? Not going to make this level anytime soon. I'm comfortable if they are dumping my stock. This is probably a stockholder here at 8.5, and I'm going to take all the vol I can while there's still some juice here in the post-blush of earnings, because we all know once that earnings balloon pops, that gas just comes racing out of that balloon, and if you don't hit it quickly, not a lot left to hit out there. So it looks like our friend taking what juice he could get out there. So we're at about 7.79 right now out there for these May 8 halves. Mr. Meatball, what are your thoughts on these? Someone looks like doing the old post-earnings overwrite for Halliburton, saying it's not really going to rally more than 70 cents to the upside in the next month. And if it does, I'm happy to get in the heck out of Dodge. What do you think about these, sir?
I mean, it totally makes sense. I mean, Halliburton came out and warned, so it would totally make sense to me that they would want to overwrite on something like that. And if you look at oil, it totally makes sense.
Just curious to see where these May 8 halves are trading right now. There's still a 57-cent bid at 63 cents. So there's still some juice to these bad boys. The stock's up a little bit right now, so that's probably helping that bid stay in there. So our friend there had to race to get him off. Maybe he could have waited a little bit, but we've seen what happens usually with earnings-related names before. So that's not always the worst approach to come in and get what juice you can while the getting is still quote-unquote good. Let's wrap it up here. We got a lot of somewhat tangentially related, easy for me to say, related names out there today. The last name on the Eye of Sauron today is Union Pacific, of course, in the railroad side of the business, but of course also deeply enmeshed in costs of energy as they how to fuel this massive transportation mecca they have throughout, and of course shipping throughout the U.S. here. Ticker symbol UMP, trading right now 147.41, off about $2.50, or not quite 2%, about 1.75%. Over the course of the past year, let's see, a year ago they were trading about 177, so about 30 handles north of where they are right now. And they were pretty much they were higher than that level going into the great sell-off. They were at 183, so they had pretty much hovered around that level for the better part of the year. They dropped a little bit down to 155 in October, but they pretty much got all that back by the time, and more, by the time February rolled around. Then February came, and it just fell off a cliff like most other things, hit a low of 105.08 in mid-March before rallying now over 40 handles. So it's been an impressive turnaround here for Union Pacific, like it has been for many things. Let's see. Their earnings are coming up later this week. They're on the 23rd out here. What do we see out here today? Looks like a similar story to what we saw earlier out there in Ruth's Chris. This time we've got 10,000 of the May 135 puts, so about $12.50 out of the money here, going up for $305. And these going up on the Philly, and again, earnings are coming up. So there are earnings in this cycle, clearly. So extra juice baked in for those. Mr. Meatball, this is kind of an interesting one because this guy's drawing a fairly aggressive line in the sand. He's got $12.50 to play with, plus his put premium out here. But still, this thing was trading at 105 not too long ago. So there is a good chance he could be well south of that handle fairly certain, like by the end of this week even. So what do you say about our friend drawing a fairly aggressive, I'll term it fairly in quotes out there, line in the sand in Union Pacific, sir?
I don't hate it, and I'll tell you why. If you want to get in on this, you might not see implied volatility in Union Pacific like this again for the next 10 years. So I like that. You're right, the stock was 105, but prior to kind of this whole mess, the absolute low for this thing was 150 in the last year, and the absolute low over the last 2 years had been about 135-ish, maybe a touch below 130 real briefly. If you're a intermediate will be fine type of investor, this is not a terrible trade. Now, I will tell you that being someone who walks a 3-year-old to watch trains, it's not me that loves the trains, it's the 3-year-old. There's a lot of traffic out there, and when things get turned back on, they're going to be, the amount of rail that's going to need to move around is going to be insane. So that is one thing I would be watching for sure.
Yes, I'm sure he has to drag you tooth and nail to go watch those trains. I know you like yourself a good train watching, sir, out there. And we're going to watch these as well. We're going to watch these Union Pacific puts to see how they fare. You agree, listeners? Think this is a harvesting-worthy level of premium? Maybe you like UNP at these levels, or maybe you think this is crazy town. Let us know. Meanwhile, though, it's time for Uncle Mike to let us know what the heck's on his crazy brain, because it is time for the strategy block.
It's time to dispense options, wit, wisdom, and education. It's time for the strategy block.
All right, everybody, let's get strategic out here. Uncle Mike, crazy times. Crude oil market is on fire. Markets in turmoil yet again. What options wisdom do you have for us today, sir?
I want to talk about orders that you can actually put in to where you can feel comfortable, hopefully, leaving your computer to actually go to the bathroom in case the BBI is very high for you, as it is for me at times like this, sometimes. I want to start with just a traditional stop-loss order. Now, what is a stop-loss order? Well, a stop-loss order, let's say XYZ stock or XYZ option for that matter, is trading at $6 per contract or $6 per share for that matter. And you know that you want to get out of it when it goes down to $5.50. At that point, I'm done, I'm out. I can't handle any more pain. Well, if that's the case, you could put in a stop-loss order at $5.50. Now, what I want to explain is what does that actually do? All it is an alert to the market that you want to put in a market sell order when that option or stock trades at that level. So what I mean is that oftentimes people think that I put in a stop loss order and I'm going to get out right at 550 because it says I want to get out if it goes to 550, then at 550 I'm out. Not necessarily. With that, if you actually put in the stop loss at 550, the market, whether it's a stock or an option, could do an intraday gap, meaning the stock could be trading or the option could be trading at $5.60. And then all of a sudden some type of bad news comes out and then all of a sudden is trading at $2.10. If that's the case, you're going to get filled at the best possible price, but the best possible price might be $2.10. So kind of have an understanding as to where the how a stop loss actually works before doing it, and just what you would need to do and what you would need to be aware of. The other thing that I'd want to add to that is that I remember, I don't know if it's even a thing anymore, but I remember when I first started in the business about 10, 15 years ago, the big thing was never put stop losses on options because those evil market makers see your stop losses and they pick you off. I don't have time to get into how that works right now, but it's not a thing. And I'll never forget, though, one of the first speeches I ever made as the director of education for Options Express. I'm like a year into the business, I'm like a couple months into the business. And the viceroy, the same viceroy from our show, actually happened to be in the audience. And some person in the audience said, well, we don't want to do stop losses because the market makers see your stops and they're going to pick you off. Immediately, I saw the viceroy's face turn from just normal flesh-colored face to being bright red. And so I stopped the presentation and I said, Mr. Jacobson, would you like to handle this question? Because at the time he was working as an official for the International Securities Exchange. And needless to say, it was a very comical 10-minute argument that the viceroy won with flying colors, and someone dared to argue the viceroy on that one, but nonetheless. Now, the next order that I'd like to talk about is a stop limit. I would avoid these orders at all costs when getting out of a trade. Reason being is that scenario with which I just mentioned, a stop limit order means you put in your stop price, meaning let's say you put in your stop price to get out at $5.50, but then you also put in a limit price, meaning, okay, once the security hits $5.50, I want to get out, but I want to get out at a price of at least $5.40 or better. Well, if all of a sudden that underlying gaps down below it, you're not getting out of it until it goes back up to where you put it in at, and your whole means of protection really doesn't work. Where I like to use stop limit orders is if I'm trying to get into something on the way up. Let's say the XYZ stock or option is at $6, and I know I want to get into it if it goes up to $7 and just ride it higher, let's say. Well, then I'd put in a stop limit order to buy it at 7, buy stop at 7, and then limit at $7.05. That way, if it all of a sudden gaps up to $40, I'm not going to be on the hook for buying it at $40 in a market order. So I'd recommend being cautious of those if you're looking to get out and use it as a risk management tool. Now, the other thing that you have the ability to do is a contingent order. So, for example, let's say you own XYZ call option, and based on your analysis, as soon as XYZ stock goes down a certain level, you know you want to get out of the call option regardless of what the price of the option is. You know you just want to get out of it. I use this order fairly frequently, and what I do, the way I'll set it up is, let's say XYZ is trading at a certain level. As soon as XYZ, the stock goes down to a certain level, I want to get out of the call option, let's say. I use a contingent market order, meaning as soon as it gets to that level, get me out of it. Now, you might say, well, but Mike, are you crazy using a market order on an option? Well, when you trade very liquid options like SPY and the bid-ask spread is 2 pennies, I feel very confident doing a market order. And you might say, well, Mike, in these volatile markets, don't you feel uncomfortable doing market orders in these volatile markets? Well, I'm not trading these volatile markets, so it really doesn't work. That's not really much of an issue for me in these volatile markets for aggressive trading. So those are kind of my two answers to those. The final order that I'd like to mention is an all or none order. It depends on what kind of size that you're actually trading. Sometimes for my institutional orders, if I'm trading over 1,000 contracts, I know I don't want to get filled on a 4 lot, because that just becomes a giant hassle to me. So sometimes I'll put in something called an all or none order, meaning I want to get into this option at this price, but if I can't get this price for all 1,000 or 2,000 contracts, I don't want to get into it. That's an all or none order. Final thing I'd like to mention about these orders is that if you are trading put options, you kind of have to change your mentality a little bit. The numbers are the same, or the words I just said are the same, but if, let's say, you want to get out of a put, if the value of the put goes down to a certain level, well, that means the value of the underlying has to go higher, in theory, of course. But if that's the case, just make sure that you're thinking these out fully if you're using a put option, and you have to kind of reverse your thinking in case the market goes up, then your value of your put will go down. So just make sure you're cognizant of that. And that is the strategy block for today, April 20th.
Well done, sir. Let's see if we can squeeze in a few folks before we head on here with a little bit of a quick mail block.
It's time to take your seat on the All-Star panel as we read your emails, tweets, Facebook messages, website comments, and much more. It's time for the Mail Block.
All right, everybody. Welcome to the Mail Block. Uncle Mikey just talking about order types. We got a comment on order types here, ironically, very timely, from frequent listener and commenter Scott Somer. He says, if you choose to use market orders fully, in caps, fully, expect to give away, in caps, at a minimum 2/3 in caps. He's very serious about this. The distance from the mid to the natural in that option trade. Yeah, we've been talking for a while here about how difficult it is to navigate some of these extremely wide markets that we're seeing out there right now. You have to be diligent. You have to kind of work it. You can't just expect to hit the mid or put a midpoint order in there and expect to get filled. You're going to have to work it a bit, probably get a little closer to the bid and the offer than you normally would and maybe would be comfortable with in order to get things done. But if you're doing, if you're saying, especially in these markets, I think Scott is correct. If you're going to do, we don't like market orders in general, but in these markets in particular, you're really asking yourself to get taken to the cleaners. His minimum 2/3, I don't know about that. I'll have to study the execution analytics to see for sure, but either way, probably not a good idea. Well, come back. You're just talking about order types. What do you have to say about this advocacy against market orders, sir?
No, market orders are very tough. I mean, like I said, the only time that I'll use them is if I really need to get out of something, or if it's on SPY and a much less volatile market. And in terms of what you're giving up with the bid ask, I'll probably put in I'll actually get like maybe one market order every 6 months that gets executed on my contingency style order that I talked about. And every 100%, I'd be, when you have a penny bid ask spread, I'm okay giving up the penny and not getting the exact fill. So I'm okay with it in that situation. But typically, if the bid ask spread is wider than a penny, then I would do everything possible to avoid a market order.
Let's see. We're running up against it, but we're getting some live questions, folks, here in the chat. Obviously concerned about what's going on out there in WTI right now. Those futures are just still continuing to get annihilated. Let's see where we are. Right. Oh my God, the May contract is at 218, listeners. That, if you just frame of reference, the June contract at 22.16. So almost 20. They are taking all of the rest of the juice out of this. I don't think I've ever seen anything, certainly not in WTI. This is just insanity. We got Tony asking in the live chat here. Let's see if I can pull it up. Here we go. Will the front month TL contract go negative today? I would have laughed that off and said never. But in this market, at this point, anything is possible with this. They're bleeding every last bit of juice out of this thing, and it's insanity. I was just talking to someone on the Skype chat during this. At the same time this is happening, we're obviously seeing size love for puts and the shares going up in names like USO, because USO just rallied about 20 cents, and the puts got much more firmly bid at the exact same time. Not a coincidence. So a lot of crazy stuff going on. I'm going to go out on a limb and say probably not, but these are crazy times. And 20 handles between May and June. Just let that sink in, listeners. 20 handles. The big question is what happens after that contract goes off the board. What do they do to June? That's what I think everyone is waiting. It's still staying pretty firm. It hasn't come up that much. It's off about not even 3 handles today, whereas the May contract is off a whopping 16 handles. Now they're saying it's getting below $1. Yeah, this is this is the delayed quote from CME. Now it's up to so yeah, good God, below $1. So yeah, we're closing in on it, Tony. At this point, anything is possible, these are scary times we're in, folks, so brace as we keep on going to the final segment. It's time to go around the block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, everybody, welcome to Around the Block. This is the portion of the show where we're telling you what the hell we're watching. I think everyone's going to be watching what the heck is going on in crude right now, listeners, because it's just these are unprecedented waters we find ourselves in. Let's go back around the horn the other way. Let's go back to the Meatball. Mr. Meatball, you guys looking at any OIV out there in the vol trading land? Obviously, it's not a tradable instrument, but you could bake that into WTI and things. What is on your radar for the rest of the week, sir?
OIV and OVX, which are just, I mean, oil vol could not get much higher than where it is right now. I'm looking at OIV, and if you think an 85 VIX was high, take a look at oil vol. It is just astronomical, and I see a lot of trades that I think are really interesting in USO and in the oil names. You know, you're right. USO maybe isn't that interesting of a outright long, but I think that it could be kind of a fun ratio or bear put sale. I mean, think about this. USO is $4, and the vol is so high that I can get 50 cents for the January 3 put, which you're saying, well, that's only $1 away. That would be a 25% drop in oil from in USO from here, which I don't care how much contango there is. That's going to be a tough draw. So, you know, even more interesting, the 1x2 put spread, the 4-5 1x2 would be even money. You could do the 3.5, 3 put 1x2, take in a 25 cent credit. A lot of interesting names there. I just think oil at this point is done.
Yeah, I've been liking ratios out there for quite some time. It's been pretty favorable, and I put some offers in, just straight up offers out here on some puts just to play around before the show, and they got filled on a rally, which is not something you see very often, and also, again, a sign of the crazy times we're in. But ratios are very attractive out there. A lot of things are interesting out there in USO. Again, if you're diligent, you're not just going to buy and hold and set it and forget it in your IRA for 5 years. In the long term, that may actually work out, but still. In the near term, be nimble, be smart. Don't just go to crazy out there. Listen, Mr. Uncle Mike, same question for you. Aside from blasting away on the XLE 30 puts, I'm just kidding, compliance folks who are listening. What else is on your radar, sir?
Definitely watching oil. This is just fascinating. Is probably the best way of putting that, to say the least. But I just wanted to continue to watch, see where we go with this, and that 290, we'd be at a 60%, approximately 2,900/290 in SPY. We'd be at approximately a 60% retracement for the downtrend from peak to trough in the marketplace. So looking to see if we can get past that. Looking to see if Netflix continues to go up to the high heavens, so to speak, and continuing to watch just strong stocks at this point. And hoping that at some point markets can go positive, because I want to trade again. I miss it.
You know, Mike, I was actually just kind of playing with this, and I'm writing this for the street right now. But you know, if you're afraid of oil, you're afraid of energy. But you also are saying, you know, at what point shouldn't I dip into energy? What would you think about someone who's long a lot of SPY rolling their position into something like RSP, where they maintain tech exposure, but all they're doing is turning those 5 names that make up 25% of the S&P 500 and getting those more to a diversified level. And then at the same time, you'd be upping your energy exposure to something that's now more a bigger piece. It's going to be 8 to 10% of your portfolio instead of 2. You know, would you think, and obviously everybody has very specific needs, consult financial professional, blah, 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 tax. You know, what do you think about that? And Mark, I'd love your opinion too, as kind of a backdoor way of taking profits in energy, or taking profits in tech and buying energy without really having to make a big dip into those names.
You're buying energy without buying energy, if that makes any sense. I think that's a very unique idea. You know, obviously, there's tax implications. You have to, and to requote Sebastian's compliance disclosure, blah, 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 blah. So make sure that you understand all that. But that's a very interesting idea.
There's that music. Running a little bit late, listeners, but of course, a lot to parse here. If you're saying to yourself, I need more, grab some direct discussion on WTI. Well, then stay tuned. If you're listening live, we'll put that, if you missed TWIPO last week, I think it's an appropriate time to hear that one again, because we broke down what was going on from a crude skew and everything else out there. It was just last Thursday, and how much the markets have changed even since then. So we'll put that in live. We'll be back in exactly an hour to talk all things going on the crypto vols and skew and all sorts of fun side of space with some great guests to help me do just that. Before we can do that, let's go back around the horn. Let's start with the meatball. Sir, if I'm intrigued by these trades you're recommending and discussing here, maybe I want to learn more. Where should I go? What should I do?
Come to me, optionpit.com. Read our VIX Edge blog that's out every day, our pit report that's out a couple of times a week. Make sure you're on our email list. If you're not, you're missing out because we have a lot of great content. My next big live event is going to be on the 28th. If you want to be able to make it, you need to be on our email list.
There you go. Check it out. I've heard a rumor through his email that there's some Edge and VIX. Maybe you want to check it out for yourselves. OptionPit.com is the place to begin that journey. And Uncle Mike, if I need some hand-holding, maybe I want someone to help me sell puts in XLE or roll my SPY puts or whatever the case may be. Just hold my hand in these tumultuous markets. Where should I go? What should I do?
Well, go to stcharleswealth.com. You can learn a little bit more about what we do there. Or also, feel free to call me directly if you want to do any of those things with which you described. 630-885-0017.
There you go. Hit the man up, stcharleswealth.com. And if you like more, you need more in your lives, stay tuned, listeners. We'll be back in exactly an hour. Put some good stuff in there. In the meantime, and by the way, if you want more throughout the week, of course, we'll be back tomorrow. Options Bootcamp. Not sure if you heard. Options Bootcamp is back, listeners. We'll be recording more episodes. We'll be streaming them live if you want to get them in early there, too, tomorrow with our old friend, the once and future Dr. VIX, Mr. Rhodes, as well as Mr. P over there at Market Taker and some other fun stuff. So join us for Options Bootcamp. We'll be answering a bunch of your questions. We'll be talking about things like ratio, put spreads, like we were just talking about here earlier. So stay tuned for that. Wednesday, of course, Options Playbook, all that other good stuff. Probably answering more of your questions and breaking down some more strategy. And then we're back again on Thursday for more of the Option Block.
The Option Block is brought to you by TradeStation. TradeStation has been giving options traders an edge for over 20 years. Their suite of simple yet powerful analysis tools and lightning-fast order execution can be accessed as an app on your phone, web browser, or computer. Education is in TradeStation's DNA, offering help for traders of all levels. And now, TradeStation is commission-free for equities and options trades. For more information, visit tradestation.com/optionsinsider. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.